After the jobs report last Friday, we have been riding the wave of flat interest rates this week and trending down softly. The best analogy that I've heard about rates is they go up like a rocket and float down like a feather. And that's what we have seen this week with rates after they shot up after last month's inflation data. Mortgage News Daily has conventional rates at 7.1% and government loans at about 6.6%. This may not be your rate. Rates depend on a number of factors, including credit score, down payment, and loan type. On Monday, we got the manufacturing jobs report, and it's showing signs of a decline. What many people are thinking right now is, are we going to see a soft landing in the economy, or are these signs of a recession in the future? Home prices increase. CoreLogic is showing that they have increased 1.2% in March. One of the questions that I get asked about the most is, how are people affording these homes? Here's what the data is showing. We may see consumer spending starting to decline. We saw this last week in the lower jobs report, and now we're seeing that in the consumer confidence, which is coming in lower. Now we have data that people are putting more things on buy now, pay later. Bank of America said that 8.5% of their 69 million customers use this buy now, pay later program. That's 5.8 million people using this program at one bank. I'm sure there are many others using this program nationwide. This could be why people continue to spend without cutting back their lifestyle with inflation. During this time of year, we usually see spending go up because of tax refunds. It can kind of stretch out people's spending habits for a bit, but that might not stick around for long. Debt is at the highest level nationally, but people are still buying homes. Over 4 million people bought homes nationwide last month. Although this number is down, that's still a lot of people. So how are they doing it? They're doing it by writing a monthly budget, working extra hours and side hustles, living with family if they can to save on housing while they put that money away. If you would like to buy a home, I'm a certified financial educator that can show you how to create a budget, pay down debt, and increase your credit score to purchase a home in any market. I'm a licensed mortgage broker in all 50 states, and I would love to help you. Click on the link in my bio to get in touch. 67% of consumers said that listing a home right now is a good idea, and we see this in the highest levels of inventory in this market, even though it's still low. Realtor.com reports active inventory is up 33% year over year, and new listings are up 10% year over year. A question I get often in this rate environment is about assumable loans. VA and FHA loans are assumable. That means if someone is locked in at a 2% interest rate, you can assume or take over that loan and get this 2% interest rate. That sounds great, but there's more to it than that. I've even heard some mortgage lenders say assuming is a great idea, but it's not. If something sounds too good to be true, it usually is. For example, let's say a home is being sold for $300,000, but they bought the home for $200,000 using an FHA or VA loan, and they have a 2% interest rate. You will still need to qualify for $200,000 from that seller's lender, in addition to bringing the cash of $100,000 for the difference, or getting a $100,000 loan with a higher interest rate. This is not a way to beat high mortgage rates. These can be a nightmare. I've seen very few of these transactions accomplished, and I've seen them drag on for months. Don't be fooled by the clickbait from the media. Talk to someone who can look at your entire financial situation and help you make the best decision. Not a whole lot of economic news coming out this week, so we will look forward to next week's data. I hope you all have a great weekend as we celebrate Mother's Day, a special day to thank mothers for everything, and I mean everything that they do. Don't forget to share this update with real estate agents that you may know, or anyone in the market who would like to stay up to date on the latest market breakdown. Thanks so much for watching. Like, subscribe, and support my channel if you haven't already. And we'll see you next week.